Dividend growth style ETFs, or specifically for this video, DGRO, the iShares Core Dividend Growth ETF, have the potential to turn a relatively small amount of money into a massive boatload of money long term. And this is due to the fact that these high quality dividend growth style ETFs like DGRO historically have moved up and up in share price, but on top of that have paid dividends to investors and more in dividends long term. Now in this video, we're going to go through the iShares Core Dividend Growth Style ETF, and I'm going to share with you some of my favorite parts of this ETF and why this ETF is going to be a large portion of my portfolio long term. But then later on, towards the end of this video, we're going to go over the exact math, and I'm going to show you, going off of previous numbers, I'm going to share with you exactly how just a $10,000 investment can mean that an investor has just shy of $1 million when it comes to retirement, and I'm not messing around. These numbers are going to shock you. Now, like I promised, we're going to go over the exact math here in a second, and I'm going to share with you exactly how this investment into something like DGRO could potentially change everything for the future of an investor. But before all that, let's dig a little bit deeper into DGRO, go through some of the basics, and understand exactly what this ETF is, how it works, etc. It says number one, DGRO offers low-cost exposure to U.S. stocks focused on dividend growth, meaning this ETF focuses on stocks that pay more and more in dividends, at least historically over time. Now, even though dividends and dividend growth is not going to be the main focus for every single investor out there, for investors like myself that are currently building out a long-term portfolio of different dividend-paying stocks and ETFs that I'm looking to supplement my actual active income with later on, dividend growth is extremely important because who doesn't want to get paid more and more in dividends over time, but more importantly, to keep up with things like lifestyle creep and inflation. Number two, under why DGRO, it says access companies that have a history of sustained dividend growth and that are broadly diversified across industries. And this ETF is extremely diversified. We're going to go over the holdings here in a second. And lastly, use at the core of your portfolio to seek income. Now, one of the most important things about any ETF, of course, is the holdings within the ETF and especially the top 10 holdings. Some of the top names in DGRO is what makes this ETF one of my favorite dividend growth style ETFs across the entire market. And this is because this ETF is extremely heavy in names like Apple, Microsoft, which who's going to complain about having more exposure to those two? But also dividend growth style names like ExxonMobil, we have Chevron, names like JP Morgan, Johnson & Johnson, we have names like Broadcom, abbvie, Procter & Gamble, Merck. A high quality, well-diversified top 10 holdings is going to keep this fund afloat no matter what really happens in the markets. Looking further into DGRO, I explained earlier in the intro that this ETF, although pays more and more in dividends over time, has an extremely well-diversified basket of holdings. On top of that, this ETF has grown in price significantly, and this is over the last 10 or so years. The ETF has over doubled as far as price goes, up 130.7% on the max time frame. On the 1 year time frame, up 12.8%. Year to date, this ETF is up 6%. Now, expense ratio is also an important metric, especially if you're looking to hold an ETF long term and stack more and more shares. And DGRO's expense ratio is 0.08%. Now, we talked about some of the top names in this ETF, but also just as important, looking at the actual sector breakdown, this is going to be something else to consider if you are looking to buy into an ETF. You want to know exactly where you're going to have exposure to, at least for the most part. Now, financials and technology together make up almost 40% of this ETF. So like I said, if you already have a portfolio that's extremely heavy in maybe some of these sectors, maybe it's not necessarily the perfect fund for you, but overall with 400 plus holdings, this ETF is extremely diversified. And honestly, what I would consider sort of a one-size-fits-all dividend growth ETF for basically any dividend growth investor across the entire markets. So now that we went over the basics when it comes to DGRO, we're pretty much all on the same page that this is a high-quality dividend growth style ETF. You're a huge fan of the ETF's performance, the stocks within the ETF, etc., etc. Now, if we were to plug in just a measly $10,000 starting principal, and I say measly because long-term, if you were to invest $10,000 and contribute forever just $1,200 per year, I think we can all agree that long-term, that's not all that much money to be working with, especially in the context of 30 years invested. Now, we're doing this because I'm going to share with you exactly the power of a high-quality dividend growth style ETF and what it can do to a small investment, relatively speaking, long-term. Now, with DGRO's most recent dividend increase, we're talking like a 2.6, 2.7% initial annual dividend yield. And keep in mind, I have to say this always, these numbers are all just estimated. Things can change in the future, but we're just going off of these numbers to get an idea. So to recap, a $10,000 starting principal, $1,200 annual contribution per year. We have a 2.66% initial annual dividend yield, a 12% expected annual dividend amount increase. Again, this can be smaller or larger over time. A 3% annual share price appreciation, 30 years invested, DRIP is going to be turned on, and this distribution frequency is quarterly because DGRO pays us cash flow every single quarter. Now, to go through some of the numbers, just off the bat, a $10,000 investment into something like DGRO is going to earn around $268 per year in dividends. But of course, after that $1,200 annual contribution and the dividend growth intrinsically, by year number 2, the principal is already up to $11,700 and over $342 per year in dividends. Now, of course, this portfolio is going to take some time to really get ramped up, and that's just simply because this portfolio is starting with a relatively small amount of money, and on top of that, only a $1,200 annual contribution. You could, of course, add a lot more to your portfolio ongoingly, and most likely, it's going to grow a lot faster. But just to prove a point, by year number 3, $13.5 thousand and $431 per year in dividends. Now, over the years through the contributions, of course, and on top of that, the dividend growth, this portfolio is going to be up to $22,000 plus by year number 7 and over $1,000 per year in dividends. And because of all these dividend increases over time, the yield on cost, this is a very important metric, is already up to 5.84%. This is one of the main reasons I always say that if you get invested into a high quality asset that has a history at least of paying more and more dividends over time, the sooner you plant your money in there, the sooner you plant your trees, the better. Now, by year number 12, this portfolio is just shy of $40,000 and $2,700 per year in dividends with an 11.6% yield on cost. By 20 years in, skipping right down, this portfolio would now be up to $105,000 with around $14.4 thousand per year in dividends. Now, from year number 20 to year number 30, things really start to change because as the power of compounding kicks in, the numbers just get bigger and bigger. And this is because, of course, you're reinvesting those juicy dividends every single year. By year number 24, the portfolio is just shy of $200,000 with $39,000 per year in dividends. Once again, just with $10,000 starting and with that $1,200 per year contribution. Now, skipping all the way to the bottom, I promise you that a $10,000 initial principal, which is $1,200 per year, long-term invest into something like DGRO. And this really goes for any high-quality dividend growth style ETF. By 30 years in the portfolio after drip, if you were to reinvest the dividends the last year, we're talking $978,000 with over $250,000 per year in dividends. Now, before you say, well, that's pretty unlikely, maybe DGRO is not going to continue to pay more and more in dividends over time. Maybe things can change. Maybe the dividends can get cut. 100%, that's all possible. But regardless, buying into an ETF that at one point was paying 16 cents per quarter and now is recently paying upwards of 30 cents per quarter just 10 years later, the amount of cash flow that an investor can generate long-term with an investment like this is honestly phenomenal. So now that we went over exactly how a $10,000 initial principal investment can turn into nearly $1 million long-term if an investor stays the course and reinvests their dividends along the way, I lastly have a question down below for you guys. As of right now, if you're currently building out a long-term portfolio, what's your number one stock or ETF that you're buying consistently that's going to pay for everything and more in your future? Drop the ticker symbols in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.